Welcome back to Yahoo Finance Live. All three major indices in the red right now. The S&P yesterday officially entering a bear market territory. But what exactly is a bear market? And how are they each different? Brian's standing by with this week's Yahoo U.
Well, class is in session, a little summer school for you, and we're talking about bear markets because yesterday's sharp decline in stocks meant that the S&P officially entered one, and it broadly refers to a 20% drop. That's measured from market peak to market bottom, and the natural question now, how long will we be in the jowls of the bear? I just want to show you very quickly that, again, the beginning of the bear market was around the new year when we were celebrating bringing in 2022. And the 20% drop was marked once we broke at the close yesterday, 37.49.63. That was really the 20% level that we were looking for. But again, we want to ask ourselves, what is the significance of a bear market? And we don't know when we've exited a bear market until we see the bottom. Now, of course, how do we know that? Are we at the bottom right now? Well, we won't know until we get a bounce back of another 20%. That's when we can declare that we have seen the bottom. So how long, though, might that take? Well, let's get a little bit of history over at least the last three bear markets, which, by the way, I want to remind you, are not the same thing as an economic recession. This is just kind of measurable as far as the markets go. These are the last three bear markets right here. We are looking at March 2000, October 2007, the great financial crisis, and the February 2020 market that was triggered by the pandemic. You can see right now, the longest one that we had seen was actually in the 2000s. That was almost 2.5 years. And the most recent bear market that was triggered by the recession, it only lasted about a month and change. Now, the great financial crisis in terms of length kind of split it in the middle, but it was the most vicious, the S&P losing about 57% in that bear market. Again, right now, because it's too early to call the bottom, we would need to wait for it to bounce back first. We've lost about 21.8%. It has lasted about 5.3 months so far. But of course, the Kiko history will bear out exactly how long this bear market lasts. That's it for this week's Yahoo U.
The seventh bear market in 50 years.
Yep.
I mean, that I think is good context, the numbers up there, because, you know, for those who have maybe just gotten into investing, aren't as familiar, you hear bear market and it sounds really scary, but in fact, they have not all been the same in terms of the length
and the
declines. And we're talking 22% off of the highs of January right now.
And you do wonder about some of these millennial or Gen Z investors that kind of got into the game during the pandemic or maybe only a few years before that. And their institutional memory of recessions and then also bear markets is the 2008 financial crisis and then COVID, right? Now, both of those in the span of things, 17 months, a year and a half is no short amount of time, but that's relatively short compared to previous bear markets where even as soon as recently as the dot-com bubble, that was 2.5 years. Imagine going through that through 2.5. Imagine going through it longer. That has happened before. So maybe there's this memory of things being more quick and to rebound than in the past. But of course, we don't know if that's the case right now. We'll see.